India as so far has been viewed as a geopolitical safe haven. If you see, China was under threat. Everybody was moving away from that, as a from a to enter into a China plus one strategy. But that strategy is also is crumbling because the world is seeing that nobody is immune from Trump's threats. Auto, ancillaries, cement sectors, then private public sector banks. These are the certain sectors which telecom particularly as well. So they are expected to drive the or anchor the earnings growth. There was some glimmer of hope, but right now, after today, recent announcements of another 25% tariff, it's anybody's guess, to be honest. The survey, more than 50%, they expect that the range to be consolidation. The market should be in a consolidation mode going forward. Investors should take take bets accordingly going forward, especially when valuations remain so high.
To say that India-US ties are strained at this point would be an understatement. Trump has imposed an overall 50% tariff on Indian imports, and India remains firm on our stand that we will not compromise on our own interests. While the markets did dip a bit after this whole development, those invested in the Indian stock market are not panicking. At least they haven't panicked so far. But it is concerning to them, and they're in wait and watch mode. So what does this mean at a time when Indian stocks are already witnessing high valuations, weak earnings, and periodic selling by foreign investors? Is there likely to be any relief from the volatility anytime soon? Is there any glimmer of hope in sight? Well, to decode this, Mint surveyed 34 investment professionals, including analysts, economists, research heads, and fund managers. And what is their verdict? Well, to figure that out, I'm joined by my colleague Abhinav Saha. Thanks so much, Abhinav, for joining us here today.
Absolutely. It's a pleasure, Sana.
First of all, can you give us a broader idea of what analysts and experts think about this whole soaring of India-US ties and how do they think that it will affect the Indian stock market?
Yeah, it was a very interesting survey that we did, and it's a quarterly survey we keep on doing. But this time it was very timely because the survey period was still 30th of July, that when Trump announced the sweeping tariffs, and again we see now again he is imposing another round of 25% tariffs. So definitely the market, the respondents, the broader long story short is that most of the people were afraid, they are afraid, and that things are going to be more volatile going forward. And then investors should take bets accordingly going forward, especially when valuations remain so high. So I mean, in a particularly a certain section, like around 10% of the respondents, they agreed that we are heading towards increasingly choppy waters, whereas there was a strong consensus amongst those section. But overall, the broad consensus, around 77%, they said that geopolitical risk, even though they have subsided compared to what we saw in Q1, they're expected to be a sense of volatility, particularly from the US-India trade side.
Got it. So since we're talking about trade, let's break down all the factors one by one. And the first one is, of course, the trade jitters. So what is the estimate of the geopolitical situation right now, and have the markets already priced in these uncertainties?
Right. So the thing about this uncertainty is that we are dealing with Mr. Trump, and there is no particular, when it comes to him, nobody can actually predict where the markets will be heading, or if a deal would be struck right now. And as we have seen, India has been very resilient, against his threats or his bullying, whatever we call it. But the thing is, market, the overall consensus from the survey, we found out that, nobody is sure or like they're unclear to what extent has the market priced in, these sort of volatilities, because as we saw, uh, nobody was expecting another round of 25% tariffs. So basically, the chances of shocks, they remain higher going forward, because nobody knows what sort of trade deal would be struck, and how things will go forward. That is the broader consensus most people.
All right. And well, the second factor, and this is one that tends to come into play every now and then, which is FPI exodus. So, what was still keeping foreign investors away from Indian markets? Is it again just the trade jitters and geopolitical stress?
Yeah. So that's very interesting because, see, first of all, two, three factors are there. One is like, the Indian market remains most expensive compared to its emerging market, peers, and also some of the developed markets, right? And the another thing is that the earnings momentum, for India, that has not really, picked up. So over the last fiscal year, or even in Q1, the whatever data has come in so far, we are seeing that the momentum has not picked up significantly, and rather there's an expectation of earnings downgrade to continue. So, it becomes very difficult to justify the stock valuations at what they are right now, because a lot of them have already incorporated, high growth metrics in their businesses, uh, and so profit, even though it has kept up pace, or the overall top line growth, which is signifying a broader slowdown in the demand in the economy, that has not recovered. So there is a structural or fundamental signs are there, which are sort of keeping foreign investors at bay. Then again, their yields, their own US yields are also very high, so it does not make sense for them to take more risk when they can earn more money by investing at home. And the third and the more crucial factor right now is then, India as so far has been viewed as a geopolitical safe haven. If you see, China was under threat. Everybody was moving away from that, as a from a to enter into a China plus one strategy. But that strategy is also is crumbling, because because the world is saying that nobody is immune from threats. So I was going to reports as well. So they, from a FPI perspective, that geopolitical premium that India used to enjoy, that has come under question. That okay, how is this going to be going ahead, because nobody knows uh, what the final outcome is going to be. So definitely that has kept FPIs from going into full overdrive mode, because the reasons for investing in India, that these are becoming very hard, to justify. And there is, and most of these investors, they don't have a specific India dedicated fund, so they are part of a broader emerging market basket, right? So in that way, other emerging market players, like we saw with Taiwan, and South Korea. So these players have become more valuable or attractive right now, especially with the trade barrier thing. It is becoming even more difficult. And we saw that in July, foreign investors already took out more than 17,000 crores worth of money from the equity market. And the broader consensus was that most of the FPIs will keep on buying. They sort of split into certain extent. Like they would keep on buying selectively Indian stocks, but a larger part also also proves that broader FPI inflows might come in, start trickling in by Q3. Once the whole festive season demand kicks in. So that is a broader expectation of a demand revival. But again, experts from vendors particularly, they also said that it might spill over into the last quarter of Q2, of FY26. So it might be too soon to also predict any inflows starting to happen from the FPI side.
Now, are there any sector specific clues that you're picking up on, not just with FPIs, but even, say, domestic investors? Because there are a certain number of sectors that have been worst hit, that will be worst hit by Trump's tariffs, pharma, textiles, etc. But what about the others?
Right. So I mean, especially so since this whole tariff proof sectors of this sort of trades started picking up once Trump announced. The first announcements came in April, and going forward, we have seen that there is a lot of preference towards domestic oriented sectors, but then again, the expectations of trade or the export or exports that more than that current results are governing the sentiments around these sectors, right? So far based on the Q1 earnings, broadly around 80% of the survey respondents, they believe that there are certain sectors which will continue to outperform. uh, I mean, pharmaceuticals are there. There are certain auto ancillaries, cement sectors, then private public sector banks. So these are the certain sectors which telecom particularly as well. So they are expected to drive the or anchor the earnings growth. But the issue is that the valuations they have already run past such growth levels of the earnings. So no matter where you touch, whatever you touch, try to touch in the market right now, it's expensive given the trajectory they are on. So the whole point is that even though they are doing good, some of them, but it has already been priced in. So it's very difficult to justify further upward movement in the prices.
Right. All right. And but despite all these things, the momentum in the IPO market seems to be decent. Not as good as it was during the entire bull run, of course, but it's not bad. So is that like a good sign?
Right. So the momentum has definitely come. Has returned. The but but around only around 6% of the respondents being surveyed, they believe that it will be enough to sort of uh, you know lead a turnaround in the broader market. So as in like usually when IPOs happen, they are a signal that businesses are doing good, promoters are feeling confident to raise public money. But again, again, if you see, it can also be a sign of more speculation from the promoter side as well. Depends on how much of stakes promoters are also selling in the IPOs. If there are higher number of promoters selling, that it definitely means that they're looking for an exit, and that is not usually a good sign. So, but the broader, lot it believes around, around 76%. They believe that we need a broad-based earnings turnaround and FPI and definitely a resolution to the trade conflict that is going on for the for the overall and sustainable recovery. And obviously, consistent FPI inflows will also have to be there. So that is the idea.
All right. Well, after this conversation, I think I know the answer to that. But still, since it's the big answer that everybody's looking for, is the volatility going to continue till we don't know when, or is there at least some glimmer of hope inside?
Right. So, back when we did the survey, there was some glimmer of hope back inside. The whole idea was that because even though around 77% of the respondents said that, it's, the market can be negatively surprised by US India trade deal, it might not go our way. Still, 76% of them were also confident that we would be able to strike a balanced deal going forward. So there was some glimmer of hope, but right now, after today, recent announcements of another 25% tariff, it's anybody's guess to be honest. How this situation will be resolved. whether it would be resolved or not, because there are, a lot of complexities involved, like, India not being willing to open up the agri sector, US not liking us buying Russian oil and, and defense equipments. So trade talks have been stalling, and there is no clarity as to how much, this will impact. So all the analysts are making their guesses, but it's dependent on only one man, and how that goes, it's only he knows, I guess. So that is the harsh reality, I guess.
Right. So just one last question that I have. So whatever you have spoken to analysts about, what can investors kind of do with that money then? Do you just like wait and watch? Or do you know, of course, like there are, yeah.
Yeah. So I mean, right now, what experts usually suggest in terms of volatility is that you just have to, bite your teeth and, like, clench it harder and just sort of wait it out. Some people obviously say that, these are good moments to buy, even, like, but at this point where the overall valuation of the market is broadly very high, it's best to stay risk averse, or hold cash if you have, uh, and if someone is invested in gold, I mean, definitely that has offered great returns so far. So I mean, there's no more reason for them to go and add gold in their portfolio. That is what expert has also been telling, because the upside still remains limited. So I think the best approach is to wait and watch, and our whole, and the market is also expected to do so, because in the survey, more than 50%, they expect that, the range to be, consolidation. The market should be in a consolidation mode going forward, until there is no absolute clarity in terms of the trade talks, at least.
Got it. So I think like you said it depends on one man alone, and we'll have to wait and watch to see what happens next. Thanks so much, Abhinav, for joining us.